I thank the chairman of the Rules Committee for allowing me this time. You know, this is a very important piece of legislation to our country, and one of the things is we've heard a little bit of the history that after 9/11, the insurance industry took a pretty substantial hit. Their reserves were drained to pay out on these claims, and as they were looking at writing new business, they were very concerned about what the future held because, you know, quite honestly, America had never experienced that kind of disaster in the past, and so they were trying to figure out how to underwrite those in the future, and so TRIA was put into place to help temporarily be a backstop for the industry for them to get back on their feet. And they have gotten back on their feet, and their reserves are at all-time highs, and they've had a number of years now to model this risk. But the reason it was originally important to do that is it basically in order to continue the construction projects of a number of projects around the country, the insurance industry needed some assurance that they wouldn't have to bear that kind of event again. Now, when we began to look at this process, when we knew this was going to expire at the end of this year, we knew that there was kind of three options out there. One is to let the program expire. It was meant to be a temporary program. There were some to do that. Some members did not. Then others wanted just to extend the program the way it was. Under the Bush administration, though, we began a process to begin to reform this and begin to transition more and more of the risk away from the taxpayers back to the insurance companies. Unfortunately, when it was last reauthorized, none of those reforms were built into it. And even the President of the United States says that TRIA needs to be reformed and has offered up, for example, to change the trigger levels. But one of the things that we have done with this bill is that we didn't really change the overall structure of TRIA. We could have written a whole new terrorism insurance program. We didn't think that was good for the market. The market had already begun to adapt to the current framework, and so we felt like if we worked within the existing framework, changing some of the triggers and some of the knobs and on this particular program, that would begin to allow the industry to take on more of the risk, the taxpayers to take less of that risk. I think we've accomplished that with this bill, and I think it's been pointed out. I think a lot of people, quite honestly, don't know a lot about TRIA, but one of the things is that the insurance industry takes the first losses in this under this program. And so if there is a loss today, as the gentleman mentioned, is that 20% of the previous year's premiums, which if industry-wide would be about $40 billion today, would be directly to the insurance companies. Should those losses exceed that, should we have another catastrophic event, then what would happen is that then the taxpayers and the insurance industry would begin to share those expenses with a provision now, and we've strengthened that in this bill. And I think this is one of the more important parts of it, is the taxpayers would get their money back and would get some return on their money. So I think we're headed in a good direction. I would respond to the point that some extraneous things were put in this bill. Quite honestly, when it came over from the Senate, it came over with an extraneous item in it as well. That was to change the structure of future Federal Reserve governors. And so basically the Senate sent over a bill that had, changing the structure of the Federal Reserve Board of Governors. They also sent over a program which, quite honestly, I agree with, and that is, and something that's in this bill, is that allowing your local insurance agent to be licensed, if he's licensed in or she's licensed in the state that they reside in, but they can also do business in other states. And none of the policy that's in this bill is new policy. This is policy that this body has voted on in the past. And so with that, I think we've got a good bill. I see my good friend from New York, Mrs. Maloney, over there, and I'm anxious to hear her thoughts on that because this is an issue that she's been very interested in that. And with that, I reserve